Hey everyone, Jen Berbas here with the Berbas Group in Austin, Texas. I'm going to review the October real estate data with you. This is in our November newsletter. We have a couple things in here that aren't in our November newsletter. There's a couple interesting trends that I think are worth showing you. We're going to talk a little bit about that. So the numbers that we typically review are here in this table. Total sales are actually up 6% year over year. That's fantastic news. We're in an environment where we have the highest real estate inventory in about 13 years. So when we can see sales inching up, that's great news. Pending contracts, so homes under contract, are up 11% year over year. And then new listings are up 8%. As we said, it's the highest inventory we've seen in a really long time. So having new listings up 8% since last year isn't really surprising. Active listings, again, up 10%. And then withdrawn and expired are up 8% from last year. This would be normal, right? We have a larger pool of inventory. So as we're hitting those fall months and properties are starting to be pulled off the market to either reset the days on market, or some owners are deciding to become landlords and rent them out, there would be a larger number because we have a larger pool of inventory to withdraw. So this isn't really surprising. This is a chart I think is kind of cool. So it's really easy in Austin, where we had these ridiculous up 20% years in real estate, to feel like somehow we've lost in the last year or so. Sure, we're down from the peak of COVID, but if you look at where our values are versus 2019, we're up 6.4% annually. This is amazing in real estate. When we build our models, and I do some projections like what if scenarios, and by the way, for anybody that has more than one property that they rent out, we have this great tool. We call it our retirement estimator. And in there, you're able to plug in what your appreciation is for your expectations for your planning purposes. I usually use 3%. Real estate is typically the largest asset that a consumer has that is leveraged. Most people don't really leverage their equity portfolio unless you're a professional trader. And with only a modest 3% appreciation a year, if you put 25% down, that's 12% return. So 3% appreciation is fantastic. The Fed target rate of inflation is about 2.5%. So seeing something like 3% over a long timeline is great. That's actually the average in Austin over 30 years. And so this last couple of years, seeing 6.4% appreciation is actually really great as it relates to real estate. The next chart here is kind of interesting, days on market. This is very specific to every area. Every neighborhood, or every, let's say elementary school or middle school, has its own days on market, its own rhythm to that area. Different seasonality, right? There's schools, neighborhoods that people move to because of schools. Typically, you'll see a little bit different seasonality pattern than you would, let's say, in a downtown condo. Those homes tend to go on the market a little bit later in the year. And likewise, the days on market is going to be really, really different at different times of year. But our 10-year average in days on market is around 40. And we are above that by about 1.6, a ratio of 1.6, so 60% higher than that at about 70 something days in the metro area. So houses are sitting on the market longer. We are having some pretty good luck getting properties sold. Of course, our sellers are very realistic about pricing, and they're presented really well. And that's really key to getting things sold before that really long days on market kicks in. We always like to say that days on market is almost a currency to a seller. So we really pay very close attention to that with listings. This is a chart that we collect internally. It gives us a pulse for the market. I like to think of this as like my dashboard for where the market is right now. The top line is active properties. The second line down, the orange line, is pending properties. And what I think is interesting here is right around, sorry, I'm using two screens, right around this time last year, which is December 20th, we see a huge decrease of inventory in the market. I expect we will probably see something like that again this year. First week of December, second week of December, either sellers deciding they're going to pull the property off the market and relist it in the spring, or they might turn into landlords, unexpected landlords. And what you saw last year was this decrease of active inventory right around December. And then you saw the properties come back on the market about 3 months later. And the reason for that is it resets the days on market at MLS. It looks like a new listing. And that's actually a time of year we were able to force a couple multiple offer situations this last year. So we really love listing that time of year. We watch the market week by week, and we start seeing when these pendings start increasing and the inventory has not yet started increasing. And that's when we really love to list. Okay. Austin metro area, the median sold price and the average sold price. So this is what we're referencing on that first table. We're saying that the increase has been about 2% year over year. This is great, shows some stabilization, and is getting us hopefully ready for a stronger spring market. Pending units by month. This is what we saw there. We have a 6% increase in pending units in October, and this chart reflects that. A little bit of a strange year. It was certainly not smooth the way it was the previous year in pending contracts. It decreased drastically in May, and that was something that was a little bit unexpected. And then new listings by month, we talked about this. With the high inventory numbers, it's not really surprising to see that new listings are continuing to come on the market. I do expect that to stop probably in the next 30 to 60 days. We should see those inventory levels drop off just like we do most years. As always, real estate is super situational and super specific to both your needs and your goals and the neighborhood that you live in. We're always never more than a phone call away. Let us know if you need anything or if you want any specific data for your area. We're always happy to help.